Hey guys, welcome to my channel. In today's video, I'll be sharing my first 2 years experience as a loan officer. So if you guys are brand new to the business, or maybe you're looking into joining the industry, this video is going to be very helpful in giving you an insight as to what to expect your first couple years in the business. Now, I want to make sure you also check out my other video where I go over my first year in the business, because in that video, I go over completely different things. So make sure you watch both of these videos. This way you can get a well-rounded picture as to what to expect the first couple years of being in the business. So without further ado, let's get started. All right, number one is that it takes learning and training. And notice how I didn't say experience. By the way, I don't like using the word experience because oftentimes it's overly used and it's used incorrectly. And it's used in such a way where you're assuming or you're presuming that you know so much when you really don't know that much. Right? Someone will say, hey, I've been in the business for 25 years, I have 25 years experience, but maybe they didn't take the business seriously, or maybe they were doing it part-time, or maybe they never learned from their mistakes. In that case, what good is a 25 year experience, right? I've beaten people out of deals that had 25 years experience, and I only have 2 years experience. So in that case, what good is experience, right? So coming into this business, I also want you to know that you don't need experience. That's not important. What you need are skills, training, and learning. That's important. So coming in, know that the sooner you do that, the sooner you have that, the sooner you will be successful. Don't correlate your success with time. Correlate it, connect it with skills, training, and your ability. So that's the number one thing that I've learned these first 2 years is, hey, the more I learn, the more I train myself, the more skilled I am, the more successful I'm going to be. It has nothing to do with how old I am. I stopped thinking about how old I was in the beginning. If you watch one of my first videos, I'll mention how in the beginning, one of the things that kept me back was feeling like I was too young, right? Because a lot of loan officers out there are 40, 50, 60 years old. And here's this kid that's 24, 25 years old, right? So I was thinking about that in the beginning. Now I don't think about it. Now I just think, hey, I need to be able, I need to learn, and I need to train. So that's very important. All right, number two is that the company that you're at is critical to your success. Now, I'm not saying that if you're at a bad company, you can't be successful. That's not what I'm saying here. I'm saying that, hey, if you're at a company with a ton of resources, a great staff that's supportive, educational, and they train you, then you're gonna be more likely to be successful, right? You're gonna get to success faster because now you have, like I said in the beginning, the training and the learning at your disposal. Whereas if you go to the company that doesn't have those things, it's going to take a little bit longer. Not that's not going to happen. It's just going to take a little bit longer because you're going to have to go out there and get that training, get that learning. So it's very important that you guys in looking for a company are looking for one that has great staff that can answer your questions, that can train you, that can be your support system, whatever. Right? But it's very important. And I'll make a video in the future because as you guys can see in my background, I'm currently at a new office. So I just recently made a switch to a new company. So in a couple weeks or a couple months, I'll make a video going over why I made the switch and the benefits of the new company that I'm at, in case you guys are interested in joining, because we are hiring all across the US, or I think in most states. So feel free to reach out in the description if you guys want more information about the new company that I'm at. All right, number three, this is very important, is you need to respect your commissions. I didn't learn this till just a couple of months ago. You need to be disciplined and respect your commissions. What does that mean? Well, when you get a check, don't just blow the whole check. Don't just be like, hey, I made 15 grand, I made 20 grand, I made 10 grand, I made 5 grand, and I could just blow it all. Because this business, especially in the beginning, is not consistent. 1 month you can make 20 grand, the next month you can make 0, the next month you can make 0, the next month you can make 0, etc., etc. You might just close one deal in that whole year, and even though that deal was 20 grand, you did 20 grand in 12 months. So when you get your checks, make sure you're very disciplined with that money. And I'll make a video in the future going over my breakdown, but right here what I'll go over is this. Make sure you set some aside for taxes, make sure you set some aside for savings, and make sure you set some aside for your business. Those three things are critical because if you're not setting the proper amount of money for taxes, right, you're gonna get into trouble, or you could get into trouble. If you're not setting money aside for savings, maybe the next month you don't close a deal and you don't have savings, then you're gonna have to go back to your 9 to 5. You're gonna have to go back to your part-time. You're never gonna be able to leave your part-time, right? So that's what the savings is for. So you wanna make sure that you constantly are building up or have a savings in this business, because the next month you may not close a deal, or maybe the industry slumps and there's no deals for 6 months. you need a savings. So make sure you have that. And then the third, invest back in the business. That's very, very important. Get marketing materials, get flyers, ads, whatever you got to do, but pour back in the business. Because let's say it's a $10,000 check and you blow the 10 grand on you, maybe you blow the whole 10 grand on a vacation, you're never going to grow your business. Because one, you don't have the savings. Two, right, you're not saving for taxes. And then three, you're not putting it back in the business, into getting more new business. So very, very important. This is something that I wasn't doing in the beginning. At least I wasn't doing it as disciplined as I'm doing it right now. So respect your commissions, respect your checks, because this is not a consistent business in the beginning. Later on, once your business, your checks, your closings become more consistent, then maybe you can put a little bit more into spending on yourself and vacations and all that good stuff. But in the beginning, be very, very disciplined. Now, I have partnered up with OnCourse, previously known as Learn Mortgage. They're one of the top loan officer pre-licensing education platforms online, and they're offering the Enrique and Greatness family 20% off the pre-licensing education and a tool called Prep Excel, which will help you guys prepare and pass the exam. So they're offering 20% off. I have the link down below. They do a phenomenal job. They helped me get my license. So I highly encourage you guys to take advantage of that offer. All right, number 4 is you need to master purchase business. Now, if you're brand new to this, you may be thinking, well, what does that mean? Well, there's 2 types of deals that you can get. There's refinance deals and then there's purchase deals. So refinance is just where people are refinancing their existing mortgages or maybe getting a mortgage on an existing property. And then a purchase is when someone is acquiring new real estate, whether it be an investment property, a condo, a primary residence, 2 units, 3 units, 4 units, etc. So it's very, very important that you focus on purchases because people are always going to be purchasing and refinances are not always going to happen. Right, refinances typically happen when rates drop. And if you build your businesses on just mastering refinances, then you're only going to get business during those time periods with rates drop. And in the other time periods, you're not going to make any money. And as you guys know right now, rates are pretty high, so people are not refinancing, but they are purchasing, or at least more people are purchasing than refinancing. So it's very, very important that you, in creating your business, having your business plan, you tailor it and figure out strategies as to, hey, how am I going to get purchase business? Whether that be working with real estate agent partners, whether that be through social media, whatever, it doesn't matter. But you need to make sure that you focus and have strategies and techniques to getting purchase business, or else you're not going to make it in this business in the long run. All right, number 5 is network. And there's a couple of reasons why network is important. And this isn't the whole thing about network is your net worth. You heard that 1,000 times. Now, the first reason network is important is because not everyone's going to be buying real estate 10, 20, 30 times a year. So you need to know a lot of people. If you're selling chocolate bars, you don't need to know a lot of people because people will buy maybe 5 chocolate bars in one day. But when it comes to real estate, they'll maybe buy 1 house, maybe 2 at the max in their lifetime. So you need to know a lot of people because they're not going to be buying every single day, every single month. And then the other reason is being strategic with who you network with, right? This is going to help your business, help your conversions in that sense, because you're not going to be prospecting to 2-year-olds, to babies, to teenagers, because they're not in the market for a home, right? So whatever that means to you, be strategic with who you prospect to, right? Like the real estate agent, maybe they want to get more listings, then they're going to maybe prospect to people that are homeowners, right? You're not going to prospect to people that are non-homeowners for a listing. It just doesn't make any sense. So be strategic with your network in that sense, and also have a big network. Now, the other side of networking that I want to talk about is people in the business, like real estate agents, title people, escrow companies, insurance companies. It's also very important that you network with those people because that's going to be a great source of information. Also, maybe you're working on a deal and you know this other loan officer that has that bank that can do the deal. That way you can tell the client, hey, maybe I can't do it, but I know this person that can. Right? So it's very, very important that you connect with people in the business, not just, hey, people prospecting, right? Not just clients, also people in the business. Another thing I want to add here is realtor partners, right? If you're connecting, if you're networking with a lot of great realtor partners, a lot of people go to real estate agents when they want to buy a home. And if they're going to real estate agents and you know real estate agents, then that real estate agent most likely is going to send you that client, right? So if you network with a lot of real estate agents, a lot of great ones, you're going to get deals. For example, the real estate agent that sends me the most deals has the biggest network. They're not the greatest real estate agent. They're not the most experienced. They're not the most skilled, right? They're not the best speakers, the best sellers. They're not the best closers. They have the biggest network. They know celebrities, business owners, right? They know a ton of people. They have like 5,000 people in their contacts, like 10,000 on their Facebook, whatever, but they have a big network. All right, number 6 is that this is harder than being a real estate agent. Now, I'm not saying that being a real estate agent is easy. It's tough, it's rough, it's ugly, but there's far more room for error as a loan officer than there is a real estate agent. You can get away with being a bad real estate agent. You can't get away with being a bad loan officer because a bad loan officer cannot close deals. It's impossible because it comes down to numbers on this side, right? If you mess up on the mortgage application, if you put a 700 FICO score instead of what the client had, which was a 450, the deal's dead, it's done. There's nothing you can do. On the real estate agent side, it's a bit more flexible. And that's why you can get away with being a bad real estate agent. I'm not saying you should be a bad real estate agent. I'm just saying it's a bit easier than being a loan officer. And that's why there's 4 million real estate agents and there's maybe like 500,000 loan officers. Don't take my word for it. That's just a guesstimate, but there's far fewer loan officers for that reason. I'm not trying to convince you guys not to join. What I'm trying to say is if you're going to be a loan officer, be prepared for it to be difficult. You're going to make less than a real estate agent, so be passionate. You're going to have to be passionate about this. You're going to have to be passionate about helping people. Because I know a few of you guys are debating, hey, real estate agent or loan officer. I just wanted to cover this because I think it is a very, very important point. If you want some easy, maybe real estate agent will be better for you than loan officer because there's so much more room for error and there's a lot more training and discipline that comes with being a loan officer. And that's pretty much it for today's video. Thank you guys so much for watching. Let me know what you guys think below. Leave a big thumbs up and subscribe for more content just like this. I make videos for loan officer training, life improvement, entrepreneurship, and real estate. Thanks again so much for your time. See you in the next video and be great.